Good afternoon, everyone. Happy Friday. We are taking a look at the markets, which did close in record territory once again across the board, meaning the Dow, S&P, NASDAQ, as well as the TSX, all closing at new record highs. And importantly, or perhaps interestingly, it wasn't as though we saw 500 or 800 point rallies in the Dow, but rather just this continued grind higher. The TSX up by about 67 points. So why is that important? Why is it interesting? It's telling me that investors want to continue to buy into this market. And in fact, yesterday we saw about $1.5 billion move into the SPY ETF. And over the past 7 days, you've seen $9.1 billion move into the SPY. So clearly investors are continuing to buy into this bullish thesis. What is that bullish case? Well, improving COVID cases in the United States, accelerating pace of vaccinations in the United States. Of course, we're waiting here in Canada. Stimulus expectations, also, of course, strong fourth quarter earnings results, and central bank policies, very supportive for risk on assets. Now, of course, the bear case continues to be stretched valuations, perhaps a little bit of froth in some areas of the market, and COVID variants, which of course are weighing on certain governments and their changes in policies that they're making. For one, Germany did close some of their borders due to this concern. Also, when we think about the markets and some of the more macro political factors, the Trump impeachment trial, no impact on the market at all. And also, of course, we're keeping our eyes on trade and maybe even some trade thawing in relations with the EU, ready to perhaps work with the Biden administration to settle some trade disputes. So we'll watch that pretty closely as well. Of course, has an impact on global growth and the demand picture outlook. We did see some continued strength in the energy shares today. The XEG, which I look at on the TSX, was up by about 2%. We also saw within the cannabis stocks, which were down by about 25 to 35% last week, or yesterday, I should say. Interesting, Horizons fund, cannabis fund, HMMJ, it's an ETF, is still up by 82% on a year-to-date basis. Those U.S. ETFs that represent the cannabis companies, the MSOS and the MJ, up by about 41 and 74% respectively. So a lot of volatility in those stocks, but those ETFs have certainly still performed very well. Here in Canada over the past week, we've seen some nice strength in our tech sector, really led by Shopify, which has been up by 13%. And just some interesting observations within the consumer staples space. And this comes from a trader that I see some of his work, but interesting observation in the sense that people seem to want a little bit more sizzle in their stock picks. So they've kind of put some of the, cereal and cracker companies to the sidelines, those defensive areas of the market. But maybe there's something to take a look at. Who isn't going to the grocery store for like an activity? I mean, that's the only way in time we're kind of getting out. It's almost as though for us, having a bath has become an activity. So when you think about going to the grocery store, why wouldn't we be looking a little bit more closely at some of these grocery stocks? That was the point made to me. Loblaws is down by 12% on a year-to-date basis. The TSX is up by about 5%. Maybe there's a catch-up trade there. Metro's down by 1.65%, yet Empire is up by 22%. So just pointing that out to you as we think about, market opportunities. We also had earnings here in Canada. Air Canada, for one, did report their results. Looks as though their cash balance is pretty good at $8 billion. Inline guidance. The government of Canada did approve their Transat acquisition. Their cargo business was up by $286 million. Their overall revenue was $827 million, which is down 81% on a year-over-year basis. Hard to believe, but that stock responded quite well. And then we also had some other earnings here in Canada. Enbridge did come in a little bit less than expectations, perhaps weighing on that stock, but it offers a 7.6% dividend yield in case you're in the yield looking area of the market. West Fraser Timber beat expectations, and that stock's done pretty well on a year-to-date basis. Perhaps, these stocks clearly benefiting from the need and desire to build. Rating changes, I'll just point out QSR, which is Restaurant Brands, which owns Tim Hortons, as well as Burger King. That was cut to a neutral over Baird. No impact on the stock. And SRU, which is Smart Centers REIT, that was upgraded over at Canaccord, setting that stock up by 3%. People actually started to pay attention to that analyst call. The yield there is 7.3%. I bought this stock, SRU Smart Centers, when it had about close to a 9% yield. I'm kind of trying to find some of those yield-oriented areas of the market that I think have good fundamentals. So anyway, have a great, safe, fun weekend and family day and President's Day. And we'll see you back here next week.